Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, hope you had a nice holiday weekend. Thanks for coming on.
Thank you for having me.
Well, we've seen a 20% jump in oil prices because of growing hope that things will start to normalize in terms of the coronavirus. What's the story in oil so far this week?
Yes. If you look at the WTI crude oil, it surged by more than 20% and it settled at $24.56 per barrel on Tuesday. The reason for that is because the hopes for recovery in fuel demand is expected to come through because lockdown measures are slowing down by various countries. On the supply side as well, in addition to previous cuts, there are fresh cuts that start to begin this month by OPEC and its allies. And for U.S. companies, if you look at Chevron and ExxonMobil, all these companies are planning to cut hundreds of thousands of barrels per day in terms of shale production. So clearly, demand as well as supply side is in favor of oil price rise. If you look at U.S. oil price, it has posted 5 straight days of gains, a longest daily winning streak since July. However, though, if you look at the stockpile of crude oil of the United States, it increased by 8.4 million barrels in the week ending May 1st, following 10 million gain in the previous week, and market expectation was only 7.8 million gain. So clearly, demand recovery seems to be remaining weak. So therefore, we do think that oil price is probably on a rising trend, but in terms of the peak level of oil price, it will be clearly much lower than the previous highs. We are expecting somewhere between $30 to $40 per barrel over the next 1 year.
Well, now oil and the reopening of the American economy sent Wall Street higher for a second day in a row. That seems to have pushed Korean shares higher today, too. Tell us what's happening in the stock markets.
Yes, Wall Street clearly showed quite strong recovery in the last 2 days. And the data from the EIA showed that weekly U.S. production averaged 12.1 million for the week ending April 24th, nearly about 1 million drop from the record highs of March. And also in the healthcare side, the U.S. coronavirus case climbed to 1.23 million, and death toll surged to 71,670. But nevertheless, if you look at the overall rise of the new patient, it is declining trend. So people are thinking that it is a positive news that the reopening of the economy can happen as scheduled. All in all, that is a good news for the equity market. And on top of that, we are seeing continuation of liquidity injection from various other countries, including U.S. And if you look at the South Korea side, we're not seeing any additional new patients coming in at a large scale. It's only like one-digit number. So clearly, this is indicating that economic recovery can be coming through on various countries in the future. If that's the case, equity market can have additional leg higher in the future. Of course, there's still a lot of doubts, but nevertheless, the liquidity condition as well as the policy implications are in favor of the equity market at this point in time.
Well, now there's some pessimism out there, though, about how Korean stocks are going to do this month. Briefly, tell us why that is and what's your outlook?
Right. People are talking about how economic slowdown is going to probably here to stay. We might have a very severe negative number in the second quarter. People are all hoping that third quarter will be a very strong recovery period, and that should be the reason why the equity market should rise higher. But if that numbers are not coming through and economic slowdown is probably, it might last for a longer period of time. If that's the case, then the earnings are not going to recover as much as we hope for. And also, there's a question mark in regards to U.S.-China trade tension side and possibility of additional tariff increases, and that raises the possibility of protectionism between countries, and that will result into additional cost. all that is negative news for the possible negative the indications for the equity market. However, though, we believe that is not going to be the case where the economic recovery will come through in third quarter. A lot of these liquidity injections and policy measures should have a positive implication. If you look at the equity market today, Kospi rose 1.76%. Kosdaq is up 2.57%. Also, the major country which is in concern of the U.S.-China trade tension, if you look at Shanghai index, it's up 0.63% after long holidays, and Shenzhen index is up 1.5%. So clearly, even though there are a lot of doubts, we think that the condition-wise for the equity market is positive. So we continue to recommend to buy into weakness if it happens because of all these concerns regarding the economic recovery.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for sharing your insights.
Thank you very much.